Have you ever wondered how banks work? It's a question that crosses many minds, yet few seek its answer. We interact with banks almost every day, but do we really understand the intricacies behind these financial institutions? Today, we're diving into the captivating world of banking, shedding light on the mechanisms that keep our money safe and help our economies flourish. Understanding how banks work is not only fascinating but essential for everyone. This knowledge equips us to make informed decisions about our finances and gives us a better understanding of the broader economic landscape. From the process of deposits and loans to the pivotal role banks play in the economy, we'll be covering it all. So whether you're a curious mind or a budding economist, this journey is for you. So sit back, relax, and get ready to understand the fascinating world of banking. To understand how banks work, we first need to know what a bank is. A bank, in its simplest form, is a financial institution that serves as a custodian of public money. A bank, in its simplest form, is a financial institution that serves as a custodian of public money. A bank, in its simplest form, is a financial institution that serves as a custodian of public money. It accepts deposits from individuals and businesses, placing this money into a pool of funds. It accepts deposits from individuals and businesses, placing this money into a pool of funds. It accepts deposits from individuals and businesses, placing this money into a pool of funds. But it doesn't just sit there, oh no. But it doesn't just sit there, oh no. But it doesn't just sit there, oh no. It's then lent out to other individuals and businesses who need it, whether to buy a house, start a business, or even just to tide them over until payday. It's then lent out to other individuals and businesses who need it, whether to buy a house, start a business, or even just to tide them over until payday. It's then lent out to other individuals and businesses who need it, whether to buy a house, start a business, or even just to tide them over until payday. This cycle of money flowing in and out is the lifeblood of our economy. This cycle of money flowing in and out is the lifeblood of our economy. This cycle of money flowing in and out is the lifeblood of our economy. Banks are essentially intermediaries, facilitating the flow of money from those who have it to those who need it. Banks are essentially intermediaries, facilitating the flow of money from those who have it to those who need it. Banks are essentially intermediaries, facilitating the flow of money from those who have it to those who need it. They're like the beating heart of the economy, pumping money through its veins. They're like the beating heart of the economy, pumping money through its veins. They're like the beating heart of the economy, pumping money through its veins. Now that we've defined what a bank is, we can delve deeper into its operations. One of the primary functions of a bank is to accept deposits. Deposits, in essence, are sums of money placed into a bank account for safekeeping. They form the foundation of a bank's operations, fueling its ability to lend, invest, and provide various services. There are several types of deposits, each with its own unique features and benefits. Savings deposits, for instance, are accounts designed to encourage the habit of saving among individuals. They often offer a modest interest rate, allowing your money to grow over time. These accounts are ideal for people who wish to accumulate their earnings while still having the flexibility to withdraw funds when required. Next up, we have current deposits, also known as checking accounts. These accounts are primarily used for daily transactions. While they typically offer little to no interest, they provide the convenience of unlimited withdrawals and deposits, making them perfect for businesses and individuals with high liquidity needs. Finally, we delve into the world of fixed deposits. These accounts lock your money away for a set period, ranging from a few months to several years. In return for this commitment, banks offer a higher interest rate compared to savings and current accounts. Fixed deposits are a great option for individuals looking to earn a higher return on their savings without the risks associated with investing in the stock market. Interest plays a crucial role in the deposit process. It's essentially the cost of using someone else's money. When you deposit money into a bank, you're essentially lending it to the bank. In return, the bank pays you interest as a thank you for lending them your money. The rate of interest varies depending on the type of deposit account and the bank's policy. It's important to note that your deposits are also protected by insurance up to a certain limit. This means even if the bank goes under, your money is safe. Deposits, therefore, are the lifeline of a bank's operations. They allow banks to function, providing the funds they need to lend to others and invest in various opportunities. So next time you deposit money into your bank account, remember, you're playing a vital role in the banking ecosystem. Another crucial function of banks is lending money. This process is a fundamental part of how banks operate and it's what keeps the wheels of the economy spinning. But how does this process work? Well, let's break it down. Firstly, when you apply for a loan, the bank evaluates your financial position to determine whether you're capable of repaying the loan. This includes assessing your income, credit score, and existing debts. The bank needs to know that you're a reliable borrower. Once the bank is confident in your ability to repay, it will offer you a loan. There are various types of loans that banks provide. These include personal loans for general expenses, auto loans for purchasing vehicles, mortgages for buying homes, and business loans for launching or expanding a business venture. Each type of loan has its own terms and conditions, which are tailored to the borrower's needs and the purpose of the loan. Now let's talk about the concept of interest rates. An interest rate is a percentage of the loan that the bank charges you for borrowing their money. It's essentially the cost of the loan. The rate can be fixed, meaning it remains the same throughout the loan term, or it can be variable, changing with market conditions. The interest rate is crucial, as it determines how much you'll end up paying back to the bank over the term of the loan. So, how do banks earn from giving loans? Well, the answer lies in the interest you pay. The interest is the bank's profit on the loan. This is why banks are eager to lend money. The more loans they give, the more interest they earn, and the more profit they make. It's important to note that banks also bear the risk of default, which is when a borrower fails to repay the loan. To manage this risk, banks use various strategies, such as diversifying their loan portfolio and setting strict lending criteria. Loans, thus, are another major revenue source for banks. They not only help banks to generate profit but also play a vital role in fueling economic growth by providing funds for personal and business needs. Banks play a significant role in the economy. This is a statement that rings true across nations and epochs. But how exactly do these financial institutions shape our economic landscape? Let's delve into that. At their most basic function, banks act as intermediaries between savers and borrowers, creating a cycle of money that fuels the economy. But their influence goes beyond merely moving money from one hand to another. One of the critical ways banks contribute to economic growth is by facilitating business expansion. Banks provide loans and credit to businesses, both small and large, giving them the financial leverage to grow and thrive. This expansion leads to more job creation, increased production, and ultimately, a more robust economy. But their role doesn't stop at the private sector. Banks also provide significant support to the government. They buy government bonds, which is essentially lending money to the government. This money is then used to fund public projects and services, from building infrastructure to providing social security. This, in turn, stimulates economic activity and contributes to the overall welfare of the society. And let's not forget the role banks play in encouraging savings and investments. Banks offer various saving and investment products that not only help individuals grow their wealth, but also inject more funds into the economy. When people save or invest their money, these funds can be lent to others who need it, creating a ripple effect of economic activity. Moreover, banks also contribute to economic stability. By regulating the flow of money and credit, banks can help to prevent inflation from spiraling out of control and maintain the overall health of the economy. In essence, banks are the lifeblood of the economy. They help to circulate money, foster growth, and maintain stability. So next time you walk into a bank or log into your online account, remember that you're not just interacting with a financial institution. You're engaging with a vital cog in the economic machine. Banks, therefore, are vital cogs in the economic machine. So, there you have it, an overview of how banks work. We've journeyed through the fascinating world of banking, pulling back the curtain on an institution that plays an integral role in our daily lives. We started with the basics, defining what a bank is and how it functions as a financial intermediary. A bank is not just a vault where we store our money, but a dynamic institution that channels funds from savers to borrowers, fueling economic growth and development. Next, we delved into the process of deposits. We discovered that when we deposit money into a bank, we're effectively lending the bank our funds. In return, the bank safeguards our money, often while offering interest, giving us a financial incentive to keep our money with them. From there, we moved on to the process of loans. We learned that banks use the money we deposit to extend loans to other individuals and businesses. This is how banks earn the majority of their revenue, by charging interest on the loans they provide. Banks assess the creditworthiness of borrowers to minimize risk and ensure they can recoup their money. Then we examined the role of banks in the economy. Banks are the lifeblood of our economy, circulating money and ensuring it flows to where it's needed most. By offering loans, banks stimulate economic activity, enabling businesses to expand, people to buy homes, and dreams to be realized. Furthermore, banks provide a safe and secure place for people to store their money, fostering trust in the financial system and promoting economic stability. Understanding how banks work is more than just a fascinating exploration. It's an essential part of financial literacy. It empowers us to make informed decisions about our money and helps us appreciate the complex financial system that underpins our economy. Understanding how banks work helps us appreciate their crucial role in our daily lives and the broader economy. Thank you for joining us today, and remember, knowledge is power.